Well, we're excited to be on the air this morning and talk to you guys a little bit about some important things that I think that are going to come up a lot, right? In the retirement lifestyle, even if you're getting to that point of retirement, or maybe you're just, just maybe got in it, right? Let's say that, you just retired last month or maybe last year, and, you think that some of your assets are, let's just say, even, or maybe you're pretty confident on where they're at or what portfolio that you're in. And today's going to be about why you should always be able to monitor, and why procrastination sometimes is not just about waiting and sticking your head in the sand, but also not being, educated on what needs to be changed. Okay. Because a lot of the times, if you're out there and you're looking to retire, the brokerage or advisor or whoever's managing money, maybe even yourself, sometimes it becomes too easy to not do anything at all, right? And we say that saying, okay, well, sticking your head in the sand, I call it that. But a lot of people also call it basically just being stagnant. Okay. And what that means is being complacent with where your money is or how it's being positioned, because it's easy, right? It becomes a, let's just say, more freedom lifestyle to where you don't think that you have to worry about your assets. Well, I'm here to tell you that that's going to really affect down the road. Okay. And, Jim brought up a couple different ideas about it, but R&Ds and maybe Roth conversions and things like that, those are some big tax liabilities that you're going to have problems with in the future. But let's talk about what it can do now. Okay. Let's talk about what happens when the market has volatility, which I'm sure a lot of you out there right now are literally seeing what's going on in the market.
Yeah.
And it's pretty crazy. I mean, you've got these major indices that are flying through the roof. Okay. And you've got a lot of positions and a lot of corporations that are very, very overvalued. Right. So, I mean, any smart investor, any smart, advisor would, be changing these things pretty appropriately. And what I mean by that is taking advantage of undervalued positions and not overvalued positions. And sadly, when you're in these market indices, right, whether you're in the SP 500, whether you're in the NASDAQ, whether you're in, the Russell 2000, the Russell 1000, whatever you're in, okay, these indices have tons of corporations in them that they're actually holding, right? So you've got to realize that you're invested in a lot of corporations. And what this does is it brings diversification to you, but it gives you the aspect of, hey, here's where I'm invested, okay? And if the overall indice starts to come down, right, you have that systematic risk. Well, that's where I kind of think in retirement, you have to be careful. Okay. And why I say that is because the procrastination side of things is, okay, well, I'm, as an advisor or as an investor, I'm going to invest in these specific assets and I'm going to leave them. You need to be looking at these assets every quarter. Okay. I suggest even changing the assets every quarter. Okay. The allocations of where you're at, the corporations that you're invested in. This could be a super, super important topic when you're in retirement, especially short-term aspects. Okay. Now, when you're in the long-term aspect for retirement, and you're looking at the long-term aspect, you don't really care. Okay. Being in the SP 500 or maybe the NASDAQ or, Dow Jones, that's great. But when you're looking more short-term, okay, and you're looking at what you have to take out, withdrawals, distributions, now you need to start looking at and stop procrastinating on how your assets are placed and where they can be positioned to really analyze risk, right? And no one talks about risk management. And I think that's where when I come in, Jim, this from my backside, and what I'm really, really specializing in is the mathematics of it. Analyzing the probability of certain corporations, certain stocks, and it's not always 100%, obviously, but when I can have a higher probability of different, scenarios, I'm going to take those opportunities rather than something with low probability, right?
Sure.
And I think that's what a lot of advisors don't do is, and if you listeners out there, the one most important thing that I think that people are procrastinating on right now is they're not taking advantage of the high probability that they have. They're just sticking to what is easy, right? And they're sticking their head in the sand. Okay, we're going to stick with one indice, right? We're going to stick with one maybe mutual fund that you have, whether you have a 401k, whether you're in Fidelity, whatever you have, and you're just sticking with that fund.
Mm-hmm.
And what you don't realize is that there's a lot of better opportunities out there that have single opportunities instead of being in the whole adjusted market. So that's one thing that I think that a lot of you listeners out there need to really pay attention to. And I can help with that. And sitting down, I think, in going over these portfolios and understanding what you're in, educating yourself on how you can take positions, better positions, and maximize your growth potential with higher probability is something that not a lot of advisors do. So I would really suggest anybody out there to overlook their portfolio. Maybe if you're fully into ETFs or fully into mutual funds, right? I would definitely take a look at these. Okay. And then we're not going to mention companies here, but I would really recommend you sitting down, understanding what are the better options rather than being in everything, right? Obviously, you have a lot more risk being in everything than you do maybe just being in a couple corporations with a higher probability. And that all comes with risk management. Okay. And that all comes with probabilities aspects, mathematics. So again, if anybody out there, if you need help with this and you're like, David, I'm in something I don't even know what I'm in, or maybe I'm a little too risky and I want to be more conservative, or I want to have a higher probability for growth. Okay. Give me a call. It's a free consultation. We sit down, we go over what you have. You always are going to have opportunities in the stock market, no matter what time you're in. There's always an opportunity to make money. And that's what I love about the market is, as an advisor, I always have the opportunity to make my client money. Okay. You can give me a call at 850-565-1705. Again, that's 850-565-1705.